The first month on the stock market's calendar has just concluded. Christmas is behind us, earnings season is upon us, and it's time now to take stock of the market through the tried and true exercise of winners and losers. Which executives and stocks had the best January? Which ones had the worst? You'll find out through the course of this video, but first, a quick note on the word loser. No one likes to be tagged with that classification, and in the case of today's exercise, it certainly doesn't mean that a stock or exec is stuck there forever. Things can change quickly in the stock market, as you know. This is just a snapshot of 1 month in 2024 so far. But the focus is sharp, and January's biggest winners and losers are clear. Kicking things off with winners. Fans of chip companies. This month alone, we have had a whopping 14% rise in AMD and a 24% increase or 120-point jump for NVDA. Yes, this comes after both stocks have already went on a ripper in November and December. And AMD reported earnings on January 30th, which didn't actually blow anybody away, but Lisa Su, the CEO, noted that revenue guidance for the rest of 2024 would be a bit lighter than expected, which drove the price of AMD down in response. However, it was only temporary and the price has since rebounded. You just can't keep this dog down right now. NVIDIA reports earnings on February 21st, and if AMD's results are a precursor, the numbers may not matter as much as investors continue to understand that an increasing adoption in next generation chips are a competitive advantage that is very hard to match. If you like face melting moonshots, these are the companies for you. Losers. Fans of Bitcoin. January 10th was supposed to be the day of reckoning for Bitcoin enthusiasts. 11 spot Bitcoin ETFs were approved by the SEC, and Twitter was full of projections calling for rips to six figures with all the cash that was about to be injected into the veteran crypto asset. Now, there was a solid pump on January 1st from 42,000 up to 49,000 on the 11th, the day after the ETFs were approved. But the wheels quickly fell off as Bitcoin's price receded back down to $38,000 per coin, prompting the Michael Saylors and Cathie Wood and co. of the world to jump back in the water and stabilize things. The price of Bitcoin actually ended January right where it started at $42,000 per coin, which isn't ideal, really, after this monumental event. Billions of dollars have flowed into the new ETFs, which require companies like BlackRock and Fidelity to hold actual Bitcoin on their books. Let's bank this fact as a future win among a losing month overall for Satoshi Nakamoto's brainchild. Winner, Netflix. The streaming giant capped off a red-hot month with an unbelievable 77-point rise, finishing January at $565 per share. This is the same company that was trading at $284 1 year earlier. And Netflix added 13 million new subscribers in the last 3 months of 2023, bringing their total viewer base to 260 million. They have also gotten aggressive, recently spending a reported $5 billion on the rights to cast WWE's Monday Night Raw for the next decade. You've got to invest money to make money, and it seems that Netflix understands and taking that to heart. And with Squid Game Season 2 on the slate for 2024 and the final season of Stranger Things coming sometime in 2025 or 2026, the power in the streaming wars may be shifting quickly back to the OG. Doubters beware. Loser. Tesla. I can't think of a bigger loser for the month than Tesla, down 24%, moving from $250 per share all the way down to $187, leading to a cheer of support actually from the anti-Musk crowd. Missed earnings across the board as well, and lower future volume and growth for the rest of 2024. Tesla's compensation pact for Elon was also rejected this month, throwing a bit of gasoline onto the barrel fire of the company's current image with traders. 2020 and 2021, Tesla was basically programmed to only go straight up. 2022 and 2023 were rocky as hell, and some of the cracks have now started to show, but it's never felt more real than it has this month. Are other automakers finally catching up? Is this the end of Elon Musk's golden touch, or is this all part of a larger plan from the world's former richest person? Winner, Mark Zuckerberg's bank account. Somehow, it feels like Mark Zuckerberg is flying under the radar until he isn't. All he's done in his career is build the Facebook Meta platform, which has over 3 billion daily users, by the way, into a 40 billion per quarter revenue machine. With that many users, is it really a surprise for the company to be able to turn around what had been a lackluster 2021 and 2022? Remember Meta stock, the one you may have been holding for the past 3 years, on its steady decline down from 380 to the depths of $90 per share? Well, it's back, baby, and it popped over the 470 mark shortly after it reported earnings on February 1st. And yes, I get it, technically a day after January, but the move was way too big to ignore, so we're including it right now. Don't tell anybody. Zuckerberg just leapfrogged Bill Gates on the list of earthly beings with insane wealth, and his bank account is up 165 billion on the stock's aggressive rise. Zuck may not always be a favorite of the media, but he's proved himself worthy of leading Meta and doing what's necessary to bring profitability back into the picture. Loser, Peloton spin classes. I probably don't have to go much further than saying Peloton hit a new all-time low 1 day ago to justify its spot here. Having the market lose faith in you is tough, and Peloton was a pandemic darling that just didn't have the staying power. It seems at this point that positive growth for the company is still a long way off, with recent earnings highlighting a drop in sales and a higher than expected net loss. Investors digested this information and the stock sold off, dropping another 24%. But is that really a concern or noticeable when the stock's trading in the $4 to $5 range? You tell me. Amazon, Apple, and Nike have all been loosely linked to Peloton through acquisition rumors, but it remains to be seen if one of these corporate giants thinks it's a wise choice taking on a sinking ship versus beating an already beaten down Peloton at its own game. If you're a diehard and love the Peloton brand along with its spin classes and other products, great for you, but just a word of caution, it may not be around or may not be Peloton brand for that much longer.